My view hasn't changed. I've been long risk since November 2022, long crypto, long tech, and just haven't changed that. And it's been stupidly good. I just kind of left my brain behind and said, look, liquidity goes up over time, over the business cycle. These are the assets to own, and it works incredibly. You know, we've got these mega trends. Just ride them. Everyone overthinks it, overworries, short-term trades it. Meanwhile, it's printing generational wealth, not only in crypto, but in tech as well. Of course, you will have volatility. And the other thing is you've got seasonality of election years, basically up only with, one big wiggle somewhere in the summer. Generally, I don't see anything to worry about.
After enduring a severe crypto winter and a volatile spring, the crypto market is now basking in a vibrant summer, though with its share of ups and downs. Following the approval of spot Bitcoin ETFs by the U.S. Securities and Exchange Commission in January, Bitcoin experienced a significant surge, appreciating by over $5,000 in just a few days. However, this rally was short-lived as prices quickly corrected, dipping below $40,000, prompting concerns among investors about the efficacy of the ETFs. Nevertheless, the correction proved brief, and Bitcoin prices surged once more, reaching over $73,000 on March 14th. Despite the ensuing choppy price action, advocates and critics alike are pondering the ETF's impacts and the trajectory of Bitcoin and other cryptocurrencies in 2024 and 2025. Real Vision founder and CEO Raoul Pal, a prominent cryptocurrency investor, remains resolute in his belief in the ETF's influence and their potential to drive the forthcoming crypto bull market.
Ever feel like you're wasting your money on things that don't really matter? Stop. You don't have time. Don't miss out on this 2025 bull run. Educate yourself now. Don't spend $12.50 on junk. Educate yourself on how to be successful in crypto using our crypto cheat guide. Unlock the secrets of crypto and make smarter investments today. Visit the website now on the link in the description for your exclusive copy. Start your journey to crypto success today.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
The RIAs do the same kind of thing. It's like they just often will say to their clients, we'll put 1% of your portfolio into discretionary stuff. So that changes. I think they all are aware how volatile this is. It's been sold to them as a volatile asset, and this is a long-term thing. My guess is there's more long-term holders. Later, you'll get the FOMO retail of everybody trying to do this. But right now, this is a lot of people like Bitwise, Fidelity, Franklin, everybody going to their client base, talking them through it, explaining it. This is more thoughtful allocation. The other thing that people haven't realized is you can now put it in your 401k. So the average millennial who's a buyer of the NASDAQ or the S&P 500 passive index products will buy this, and they'll buy it every 2 weeks with their paycheck. And so we will see a difference in the structure of flows, as Jamie's alluding to. It's just going to change. Probably means it's less volatile on the down cycle. It also could cause a full bubble on the up cycle this time around, because you've got numerous new participants who could enter. And, this is a limited supply asset, and 80% of it's hoarded. So it can get pretty tricky. So I don't know how it plays out, but I don't agree with Jim Bianco. I know a lot of purists don't like it because it's an ETF and not people opening wallets and self-custodying. I actually think of it as a Trojan horse, where we're actually teaching people about this product. Before you know it, they understand why they're buying it, and they come into crypto land. I think it's relatively good quality holders. Also, Hunter Horsley hinted that I think it's on the quarterly statements. You'll see who the big holders of the ETFs are. And he hinted that you'll be surprised who's on the list.
We've already started to see accumulation by institutions at a sovereign level, whether that's sovereign wealth funds, the pensions, potentially nation states. You've got mining operations now in several countries around the world where the countries themselves have co-invested with private mining companies. So, and these are countries that are sort of typically energy rich, and are significant players within that, within the energy markets. And I think they see the world very differently to, Europe or the United States or Western countries. I don't think we'll see any major announcements in the short term. I just think that, my working hypothesis is that they're accumulating. They've got access to virgin Bitcoin through the mining operations. If they foresee a world in which Bitcoin does become significant, they can avoid one of the major steps in disclosing and showing their cards by going to a BlackRock, going to a Coinbase to acquire coins. They have access to virgin coins domestically. So it's just, it's another sign for me that, the game has changed. I think Pomp said on TV a couple of days ago, this is a pullback for ants. This is a Bitcoin pullback for ants. I mean, it's not even 30%. We should expect 30 to 40% pullbacks in a bull market where we've seen 150% appreciation in just the last 12 months. So it's been a little bit unusual, and that's really the structural buyer of the ETFs that's smooth things out. I follow the derivatives markets really closely, perhaps more closely than I should, given I've just got scar tissue from the last cycle, because that was really what brought the markets, undone eventually in Bitcoin. I still think they're going to play a major role. I'm watching it just for the earliest signs that we're starting to see the buildup of concerning leverage and sort of behavior that is toppy in nature. You still see very high open interest, but the funding rates have come down. Now, the funding rates are still elevated. So we do need a reset. We need some of the open interest to go away. We need funding rates to get somewhere back to neutral. But it could very well be that they stay a little bit more elevated because we've got the perception ETFs are there. They're buying every day at 3 to 5 times the supply. I'm fine. I can take this leverage. And that sort of builds in risks over the long term. But to your point, Maggie, we could pull back a little bit further, but I think, we're sort of at the halfway point in the cycle.
Pal's remarks were prompted by assertions made by Bianco Research President Jim Bianco, who suggested that the majority of purchasers of Bitcoin ETFs from issuers such as BlackRock are retail investors. Bianco's main apprehension lies in the perceived lack of commitment among retail investors compared to institutional ones, fearing that they might quickly retreat at the first signs of trouble. However, some issuers, like Bitwise's Hunter Horsley, have hinted that institutional interest predominantly drives the market. BlackRock, among others, has signaled its involvement in spot Bitcoin ETFs for its substantial multi-billion-dollar funds. During the interview, Pal and CS delved into their perspectives on the current crypto cycle, particularly focusing on its nature. Pal outlined 3 potential scenarios for the cycle's progression. He assigned a 60% probability to the first scenario, envisioning a typical crypto bull market where Bitcoin's price could soar as high as $200,000 by 2025. The second scenario, with a 20% likelihood, predicts that heightened institutional adoption will amplify the bull markets, resulting in even greater price appreciation. Pal's third scenario, also with a 20% chance, suggests that the cycle may be front-loaded and could end earlier than anticipated. However, Pal expressed particular concern about a scenario he deemed most troubling, a double-top pattern that could inflict significant pain before any recovery occurs. This cautionary sentiment underscores his apprehension regarding potential market volatility.
I do think that we get to around sort of 150,000 this cycle. I think that's fairly moderate. That's just looking at a halving of the returns off the lows of the cycle to the peak. And so I think we do half as much as we did last time, and that sort of brings me to around about 150,000. And the ETF flows are sort of hopefully, I think, baking in that that result. But I honestly don't know. It could go either way. I think the swing here is to really watch the derivatives market, because that brought the last cycle undone. And that's just the way things go. I've seen. The problem I think people have with forecasting is that they can look at the previous cycles and say, well, if this didn't happen, then we would have done this. Therefore, this is... So the market is the market. At the end of the day, the price is the final verdict. So I just look at the last price and not take out any of the sort of events that happened during that cycle, whether it was a China ban, the liquidity cycle, whatever it is, look at it and think about actually what that means for future cycles. I do believe we get a moderation. So I'm not in the camp of the 250,000, but I'm with you, Raoul. There's a probability that it will.
Yeah, it's the one that scares me is the short cycle. The kind of slightly stunted. I think that was the last cycle was like that. And I think we all have PTSD, so we can deal with that one. if they take away the punch bowl a bit early, we can kind of deal with it because most people are sort of expecting it. A relatively normal cycle, I think people are fine with. My fear is the 2013 double pump. That's terrifying. Because that was a 45% correction mid-bull market. Everybody thought it peaked because it had already done 10x or 20x or 30x, whatever the stupid number was. And then it did like another 20x from that point.
We've got stocks rallying again. The Fed said they're going to ease 3 more times. So, Raoul, is this just, risk on again? Liquidity's coming? My
view hasn't changed. I've been long risk since November 2022. Long crypto, long tech. And just haven't changed that. And it's been stupidly good. I just kind of left my brain behind and said, look, liquidity goes up over time, over the business cycle. These are the assets to own, and it works incredibly. We've got these mega trends. Just ride them. Everyone overthinks it, over worries, short-term trades it. Meanwhile, it's printing generational wealth, not only in crypto, but in tech as well. So just don't overthink it. Tomorrow will be more digital than today. So therefore, that's the secular trend. And the business cycle, we've only just bottomed in the ISM, or bottoming. So we haven't even got anywhere. So there's nothing to worry about. Of course, you will have volatility. And the other thing is you've got seasonality of election years, basically up only with, one big wiggle somewhere in the summer. Generally, I don't see anything to worry about, unless even if we go to war with somebody, they're just going to print more money and then just drives the price up. I just don't have anything to worry about.
Pal and Co. emphasize that no bull market, whether in crypto or any other asset, is without its challenges. They advise anticipating typical drawdowns of 20 to 30% while maintaining unwavering faith and focusing on the broader perspective. According to the esteemed macro analyst, the central issue lies in the detrimental impact of central bank policies, such as incessant money printing, which have compromised prospects for a conventional progressive future. Pal asserts that investing in crypto and technology represents the most viable means of counteracting these challenges, as these asset classes have consistently outperformed traditional measures like the Fed's balance sheet. Pal foresees the total crypto market cap reaching unprecedented heights of $10 trillion by the end of this cycle, with potential for further growth of 10 to 20 times within the next decade. This outlook presents a unique lifetime opportunity for all investors. The video by Pal and Co. prompts reflection on the nature of the current cycle. Will it follow a traditional trajectory, be characterized by short but intense volatility, or manifest as an ultra-bullish scenario, amplified by the influence of ETFs? Your insights and contributions to the conversation are welcomed in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.